Okay guys, welcome to this lesson on Doji part 2. So in this lesson I'm going to talk about something that's a little bit different than Doji, but a variable of Doji. And this is the Dragonfly Doji. So Dragonfly Doji looks something like this. So you have a straight line again, meaning the opening and closing price is the same, but instead of being in the middle like the normal Doji, it is right now at the top. And you have a long lower wick, and when it comes to upper wick, preferably, ideally, there's no wick, okay? But sometimes when you see that the wick is very small, the upper wick is very small, it's still okay, as long as it's not too long. So basically the psychology of this pattern is that initially sellers dominate during the earlier session, then after that buyers start to come in and then push the price up back to this level, okay? And this is a strong bullish signal when you find it in a bearish trend, especially at the end of a bearish trend. But if you see this in a bullish trend, at the end of the bullish trend, this might tell you that the price is going to go down, because the fact that there were so many sellers that came in to push the price down, it also means that sellers are starting to come in. But if you ask me, is this more of a bullish signal or a bearish signal? This is more of a bullish signal. Now if I'm to ask you which pattern is stronger, the first pattern or the second pattern, the answer would be the second one. So the longer the lower shadow, the stronger it is, but it is relative because it depends on what the size of the previous candles, okay? So I give you some case studies. Example, Dragonfly Doji is not that common, but if you see it, you need to take note of it. So can you spot where the Dragonfly Doji is? And is it significant or not? So you can see the pattern being over here. So you have a small upper wick, which is okay. And this indicates that there will be a bullish movement coming up. The next candle and subsequent candles show you that things are bullish, okay? Even though it is a red color, but you have a long lower wick. And price came down and then test this trend line and then bounce up. And so this bullish trend started off pretty steep, and then after that the angle reduced from here onwards. Okay, another example for you. So this is a bullish trend over here, okay, a short one, and also this doji is testing a resistance zone over here, okay? With any patterns there will be false signals. Does this mean that if a Dragonfly Doji appears at the end of a downtrend, then it's going to reverse straight away? Sometimes it will be a false signal. For example, Dragonfly Doji is over here, okay? If the next candle that forms is a bearish candlestick signal, then it tells you that price might continue to go down from here, okay? So to determine whether it's a false signal or not, look at the next candle. Doesn't matter which time frame you use, just look at the next candle. Because if the price breaks the low of this Dragonfly Doji, it means that the support did not hold, okay? The support did not hold. So instead of the price bouncing back up, it continues to go down. Okay, give you another example over here. End of the downtrend over here, and you see almost 90-degree drop in selling, and this would likely cause sellers to take profit. You can see that there are two Dragonfly Dojis, which increases the chance that the price is going to U-turn and go back up. When the Dojis are formed, RSI went from oversold back up to the neutral level, okay, which is an indication that the trend is going to end. Okay, another example, this context right here would be a false signal. So you can see Dragonfly Doji over here. How do you know it's a false signal? Just from the fact that the price is testing this 100 SMA alone, you know that high chance is going to bounce down from there. And also the next candle that forms is a bearish candlestick pattern. So if you have to buy after this Dragonfly Doji is formed, you are going to get stopped out. And you do realize that at the end of the trend, a lot of times you see a massive sell-off or a massive amount of buyers to push the price up before the trend U-turns, okay? So this is a good sign that the trend has ended. Most importantly, when the price break this trend line, which will extend back all the way back, okay, then it's a confirmation that price is going to end its downtrend. And of course, price can sometimes come down and test this trend line. Okay, one more example. Dragonfly Doji over here. Okay, is this a good time to buy? Again, first thing first, it is testing your 100 SMA, and the next candle that forms is a bearish candle. So is this a false signal or not? Look at momentum indicator. It is telling you that price is overbought. Okay, so would you buy in this case? Of course you won't. So just like any other patterns, you gotta learn how to spot false signals. Don't only just learn about how to enter using these signals, also learn how to spot false signals. Okay, some of the factors that increase the strength of Dragonfly Doji. If you have a long overshadow, then it increases the strength. No upper shadow forms at the end of the downtrend, forms at key critical levels on an uptrend, on a support, on a resistance, on a moving average, or on a trend line. And also when momentum indicators is at oversold levels in a downtrend, and also when it is followed by a bullish candle, and after a long bearish candle in a downtrend. Basically, this is a summary of what I taught you just now. So how can you use Dragonfly Doji to enter? Basically, the most important thing is it must be formed at a key critical level. If momentum indicator doesn't give you a signal, it decreases the probability a little bit, but the most important thing is that it must be formed at a key critical level. Okay, but if you're more conservative, you want more confirmation, then you can give this trade a miss. Okay, so you can see the Dragonfly Doji over here. Alright, and it is testing your 100 SMA. There's two Dragonfly Dojis. And some more, the next candle that forms confirms the fact that the price is going to continue to go up. So what you can do is that you can place your stop below 200 SMA and enter once this candle close, bullish candle close, and you can put your take profit at the recent swing high. But if you're a fundamental trend follower, you can hold your trade longer. And also if you use this for higher time frames, then you can capture a lot more pips. Okay, so with that, I'll talk to you in the next lesson. Bye.